Allow me to start this video by asking you a very simple question. What do you think is the difference between 100 shillings that was deposited in a money market fund 1 year ago and 100 shillings that was placed on a table, either put under the mattress or put in a piggy bank or even in a bank account that earns zero interest? What is the difference between those 200 shillings? Do you think they are the same thing? Do you think that they have the same value today? Or what is the difference between the two? Now, tell me in the comment section, but I want to show you something that is quite interesting on this video. And in case you have never understood the purpose of a money market fund, I want to show you something interesting that might make you understand what exactly our money market funds meant to do. Welcome aboard. This is our money market fund weekly review, where we get to check the interest rates from the money market funds. We get to see how they are faring. We get to talk about inflation, because you cannot talk about money market funds without talking about inflation. And of course, we get to mention about the Treasury Bill's interest rates, because a discussion about money market fund without talking about the Treasury Bills is incomplete, simply because the returns that you get from your money market funds are directly affected by the returns of the Treasury Bills. I want to appreciate you for always coming back to watch and learn from these videos. And in case you are coming across this page for the first time, welcome aboard. This is Finance Focus with Andrew. Consider subscribing to this channel. Turn on the notification bell so that you get notified anytime we get to post a new financial tip. And in case at the end of this video you get value from this video, ensure to give us a like, give us a comment, and most importantly, share this information to as many people as you can. Now let's get to the story. And I want to start with the interesting bit that I wanted to tell you in this video. Now, a year ago, that is on the 21st of July 2025, I deposited 100 shillings in ZD Money Market Fund. It was not an investment, of course. I was just trying to see what is this ZD Money Market Fund that Safaricom have registered. And I clicked a few buttons here and there. You know how simple it is opening a ZD Money Market Fund, and deposited 100 shillings, not for the purpose of investing, because already I had a money market fund years ago, so I didn't think that I needed another one. This was just an experiment that I was doing. So I deposited 100 shillings in ZD Money Market Fund on the 21st of July 2026. Fast forward a few years, 1 year later, that 100 bob is now worth 106.63 shillings. Now, and that is why I asked, what is the difference between 100 shillings that was deposited in a money market fund a year ago and 100 shillings that was put under the mattress or in a piggy bank at the same time? So I want you to understand that my 100 shillings has grown to 106.63 shillings, but the 100 that was deposited in a piggy bank a year ago, it's still 100. Now, has the 6.6 shillings made me rich? No, and it will never make me rich. And that is why we agree that a money market fund will never make anyone rich. And we don't dispute that in any way. But I want you to understand that right now we are talking about an inflation rate of 6.4%. It means that the 100 shillings that was put on a table in a piggy bank under the mattress a year ago has lost value at a rate of 6.4%. So it's worth 94 shillings and something. I hope it makes sense. What that 100 bob could have bought worth 100, it can no longer be able to buy that thing. It can only buy something that is now worth 94 shillings. But my 106 shillings, if we subject that to inflation, it means that it's now worth 100. So my 100 bob a year ago is still worth that 100 bob a year ago. It means that what I could have bought with that 100 shillings a year ago, right now it's costing around 106 shillings. And my 100 bob have grown to that 106 shillings. So I have not become rich because I deposited 100 shillings in a money market fund. I have not got returns from the 100 bob that I deposited in a money market fund, but I have preserved my capital. I have preserved my purchasing power. And that is the basic thing that a money market fund is supposed to do. And mind you, as you'll get to see as we'll get to see in a few minutes, ZD Money Market Fund is not one of the best performing money market funds, but you see that it has managed to preserve the purchasing power of my 100 shillings. So what about if you get to deposit your money in a money market fund that is doing quite well? So think about that. Now, for now, let's get to the table. We get to see what I have prepared and what I want you to see as far as the trades in the money market funds and the performance in the money market funds is considered. Now, my table have 5 columns for the sake of understanding, so that you can be together. The first column indicates the fund manager. This is the guy that you have entrusted with your money. Then on the second column, we have the returns that was given by the fund managers on the 17th of July 2026. That column, returns given on the 24th of July 2026. We are comparing those 2 days, that is days that are a week apart, so that we can get to see the trend. Then number 4 shows the changes that happened within the 1 week, and the last column shows the real return. So what is the real return? Beyond subjecting the returns from a money market fund to withholding tax of 15%, I want to see what is the real growth. What is the real growth that your money is getting? And that is why we subject that money to the inflation rate of 6.4% currently, and that is how we end up getting the real return. So that is the return beyond protecting your money from inflation. Is your money market fund giving you further growth? And you can see the numbers as they are. Now let's get to see a few characters on the table. And on the said date, that is the 24th, on the top of the list we had Nambo Africa with a gross return of 11.74%. That is a real return of 3.58%, followed by Saiton 11.35%, followed by that is a real return of 3.25%, Lofty Cobon 10.58, 2.59, Nwealth 10.52, 2.54, Kuza 10.46, 2.49. You can get to check the table all the way. We cannot be able to read the table one by one, and these are things that you can just check for yourself. So I'll just be wasting your time if I decide to read the entire table. So you can check your money market fund of interest, because the money market fund that you are most interested in is the money market fund where you have deposited your money. So you can go down the table and get to check how is your money market fund faring? Is it fighting inflation, or is it not doing the assignment, the simple assignment that it is not supposed to do? Now, sorry for that. I want us to check a few characters at the bottom of the table. And at the bottom we have equity at 5.26. That is a real return of negative 1.93. Then we have ZD, the one that we are talking about, at 6%, a real of negative 1.30. African Alliance that is 6.20, a real of 1.13. ABSA 7.27, a real of a negative 0.22%. Now, you get to realize that these 4 money market funds have a negative real return. But does it mean that the people who have invested in these money market funds are losing money? No. We have just seen that I have been receiving around 0.01 shillings every day from my 100 bob in ZD money market fund, even if it is giving a negative real return. So it only means that your money is growing at a rate that is lower than the rate of inflation. So any money market fund that is giving a net return of less than 6.4% currently, it is growing at a rate that is lower than the inflation rate, and that is why we end up with a negative real return. There is something I want you to understand. Like right now, we are just from seeing 100 shillings in a ZD money market fund a year ago, and we are also talking about the inflation rate of the last 1 year, and you realize that even if right now ZD has a negative real return, the return in my 100 bob is greater than the inflation rate, simply because within that 1 year range, there is a time when the ZD money market fund was doing better than the inflation rate. So that is why at the end of the day you find that even if right now it is not doing better than the inflation, the times that it was doing better than inflation rate is covering it for the periods that it is not doing well. So in the long run, a money market fund is likely to help you protect your money from inflation. So those four does not mean that these investors are losing money, but it only means that the money market funds is giving returns that are lower than the rate of inflation. Now, something interesting, I have put some colors with on the fourth column there. That is red, green, and yellow. What it means, if you see a red, it means that the rate decreased from 17th of July 2026 compared to what they gave on 24th. It was a decrease. A yellow means that the rate stagnated, and a green shows that there was an increase in the interest rates. Remember, the interest rate changes on a daily basis, and they are reported on a daily basis. So we are not talking about that the rate dropped the entire week. We are talking about the only 2 dates that we are getting to compare. Now, so you can get to see whether your money market fund is increasing in terms of interest rates, but the general market improved by 0.12%. Now, I want you to note that the market average on the 24th was 9.25%, and the reason as to why I decided to put that figure there is that you can get to check and compare your money market fund with the other peers in the market. So what are the other peers in the market doing? You see, if your money market fund is doing at 2% and the market is at 9%, that does not make a lot of sense. It is not justifiable. So it's good that you get to compare your peers in the market and the market. You need to compare your money market fund and the other peers in the market, and I want you to use that average. Now let's talk about the treasury bills very fast. We are comparing, we are checking on the auction that was closed on the 23rd of July 2026, and unfortunately this week we had a decline in terms of interest rates in all the treasury bills. That is that is a decrease of 0.0165 in the 91 day. For the 182 days, we had a decrease of 0.0150, and the 364 days, we had a decrease of 0.0054. The trend is not the same. We have been experiencing an upward trend in terms of treasury bills interest rates, but this week, But this week, the trend was quite different, but we cannot rule out that the money market, the treasury bills interest rates are going down. We just give a time and we get to see what direction does the interest rates get to take from here. I want you to understand that the biggest chunk of the money market fund, the biggest chunk of the funds you deposit in a money market fund is invested in the treasury bills. So the interest rate that you get, the interest rates of the treasury bills directly affect the returns in your money market fund. So if the rates goes up in the treasury bills, you expect the same to happen in the money market funds and vice versa. But that is it for now. That is what I wanted you to understand as far as what is the purpose of a money market fund, inflation, treasury bills, and the general trade of the money market fund environment as at the 24th of July 2026. Remember, I asked you a question when we started this video. I'm still waiting for your answer in the comment section. What do you think is the difference between 100 bob placed on a table 1 year ago and 100 bob deposited in a money market fund 1 year ago? Is there a difference, or the 6 shillings difference does not make any sense? So let me know in the comment section. And of course, if you found this video helpful, be sure to give me a like, give me a comment, leave me some feedback, and share this video to someone whom you think need this kind of information, so that we can get to spread this gospel to as many people as possible. Until next time, stay financially woke.